Good morning and welcome to everyone. Good morning, good afternoon, good evening to everyone, wherever you are all over the world. And welcome today to our US webinar, where we're going to talk about all things America. Everyone or anyone, any businesses expanding into the US, and hopefully we'll be able to answer all your questions today. So we have an amazing panel of speakers lined up who are going to share their wisdom and expertise in understanding this very highly popular and attractive market that so many companies want to go to. And as always, we would love to hear from you. So any questions or comments that you have, please pop them in the side panel so that our speakers can actually see them and provide feedback as we go through the session. Just to put some context behind the webinar today, we've had a pretty volatile year, as we all know, and no one will deny that, and so many problems and so forth with businesses entering new markets. But despite these problems that everyone has faced, the US remains a highly attractive market to both invest in and operate locally. So the country has a lot of complexities around federal, state, and local tax regulations, around legislation, entering the market, but not very easy to understand. So there have been recent changes in law as a result of COVID-19, and we've seen new acts being implemented as a result of coronavirus. We've also seen lots of things, the government, with their stimulus packages that they've been giving to different people and to different companies. So I think, as a result, I mean, previously, from my own personal experience, America has always been a complex market. And people often think it's an English-speaking country. So if you're from Europe or from Australia or any English-speaking country, you think it will be quite simple to go and set up. But it is actually quite the opposite. So I think just to put things in context, it's really important to get advice early. And the sooner you can get that, the better results you will get. So personally, I would say when I had previously been running my personal business, America was always one of the biggest markets that we wanted to crack. And celebrities try it, big companies try it. We know Tesco tried it and failed quite publicly, it's known. But so what is it that's so complicated about winning in America? Over the years, I personally think that if you have the right lawyer or you have the right accountant, those two parties can seriously change the direction of where your business goes. So today we're going to be joined by not only valuable lawyers, but an accountant as well, who are going to navigate the complexities for us. So this takes me straight to our panel of speakers, who I'm going to introduce. But before I do, I just wanted to say how excited I am today, because there's such amazing people in their own right. They come from firms that have won multiple awards and recognition, providing impeccable service to clients. They come from firms where, and if you think about it, when you're a small business and you go to a reputable firm, you often get the B team that's assigned to you. So you may not go to the partners, or you may be able to get to the most experienced people in that firm. Well, these firms that we are speaking to today, they're renowned for knowing that they can speak to any client, any size, at any time. So we have to give them an applaud for that. So our first speaker is Teresa Gordon, a woman of power, one that you really has to be on your side. She's an accountant by qualification from Clayton McCurvey, a firm that's been serving both domestic and international clients for over 70 years. And this year, the firm was voted by Forbes magazine as America's best tax and accounting practice. So Teresa is a leader in the firm of foreign direct investment, working exclusively with global companies expanding to the US. So welcome, Teresa.
Hi, thank you so much. Very excited to be here today.
Thank you. Next up, we have Tom Thorelli from Thorelli and Associates, a firm based in Chicago, again, established for over 40 years. So you can see these firms have long-standing and highly reputable with great integrity, offering an array of legal services, particularly for European companies expanding into the US. Tom's expertise is within IP law, employment contracts, immigration. He works with fast-growing tech companies, and he's highly respected with the Department for International Trade and frequently advises EU companies setting up in the US. So welcome, Tom.
Wow, what a nice introduction. Thank you very much. Great to be here, Asma. Thank you.
Deserving of the speakers, I have to say. And last but not least, I would like to welcome Eric Fox from Ivans, Phillips & Barker, a tax law firm based in Washington, D.C. The firm deals exclusively with federal tax, comp and ben, estate planning laws, and was founded in 1935 by the original judges of the U.S. tax courts. So impeccable reputation there. Eric is the managing partner at IPB Tax and specializes in corporate tax issues, as well as estate planning. And I am told he is an avid chess player, so we'll have to test him out on that. Eric has a prestigious client base from some of the largest brands in the world and is always available to offer his guidance and expertise. So welcome, Eric.
Thank you, Asma. It's good to be here.
Thank you. Right, so with such a prestigious lineup of speakers, I do feel a little bit nervous because obviously you're all experts and I don't have that knowledge. So I hope I'm going to do justice to this session today. So I'm going to get straight in and ask Teresa first. So Teresa, I did a little bit of research before coming on here today. And according to the World Bank, the US, quite surprisingly, from my perspective, has ranked 55th in the world for ease of doing business. So I would have thought, it would be much higher up the rankings. And I assume, this is because there are so many states and so many complexities around it. So I'd just like to ask you, if a company wants to set up, what should they be thinking about in advance, and what should dictate the structure that they opt for? Is there any advice or guidance you can help our audience to decipher from that?
Sure, absolutely. I think one of the important questions you should ask when you're thinking about expanding to the U.S. is, what role will the U.S. company have in the global transaction with the U.S. customer? And what I mean by that is thinking about that question, and believe it or not, a lot of people can't answer that question even after they've set up an entity in the U.S. Why that's important, it gets you thinking about considerations like your customer. Who's going to have the contract with the U.S. customer? The supplier, is it going to be supplied, are you going to supply a product manufactured or a service performed from your U.S. employees or from the parent company? Who's going to manage it, and where are they going to be located? Once you make an investment in the U.S., you have to think about, are you going to hire an executive, a president in the U.S., or is it going to be managed from abroad? And also, how is it going to be funded? What kind of funding is going to be required until it is self-sufficient for cash flow? And also tax and transfer pricing are very key issues to think about. They speak to what kind of intercompany transactions you're going to have, going back to the customer and the supplier considerations, but also where your employees and customers are located, and what that brings up for you to consider with regards to not only federal but multi-state taxation. And kind of last, all of these things are interconnected. And you also have to think about, when you're planning to enter the market, what's your long-term plan? Are you there to grow it and go from a sales office to a manufacturing facility or an R&D facility? Or are you looking to grow the U.S. market and have an exit strategy? So really starting with that first question is, what do I want to take place in the U.S.? What role will that U.S. company have in the global transaction? Really brings you into all the important considerations.
Fantastic. That's a great answer. And so I guess, going back to advising clients many years ago now, when they were entering markets, one of the first questions that used to come up quite often, I guess I see the US very similar to the EU, with so many states. And there are so many different laws, because if you've got a qualification or you've got a regulation in one state, it's completely different from East Coast to West Coast. And with the UK, it's similar. We used to be one EU nation. Obviously, we're not anymore. But is that right? I mean, are there these complexities that exist?
Absolutely. Multi-state taxation, both for income tax as well as for sales tax, which is quite a surprise. It functions very differently than VAT, which most foreign companies are used to. That is one of the biggest differences and one of the biggest surprises to companies, especially when they're just initially thinking about that U.S. expansion. And it can be straightforward, or it can be very complex, and it doesn't have to do with the volume or the size of your business. It has to do with where your customers are located, where your employees are located, and then based on those locations, what are the laws in those specific states? And also your business model, especially for sales tax. Are you selling to the end customer? Are you selling a product? Is it a service? So really a lot of the multi-state complexity can be managed by having an advisor who really understands your plans, both now and long-term, and your operation. You know, where are your customers? Where are your employees? What are your employees doing? Are they going into, you know, are you selling into, you know, 20 states, or you have like one main customer in one state? And do you have remote, especially after the pandemic, do you have remote employees that either have gone to different locations because of the pandemic, or you're hiring in multiple states because that's where you find the talent, and now remote work is more easily managed. So a lot of facts and circumstances, and a lot of understanding your plans and as they change. You might come into the US with a plan of servicing these customers in this market, in this area, but you may find that your activity really ends up to be in more places than you expect, which is usually a good thing, except you have to keep up with the tax compliance and complexity there.
Okay, fantastic. So following on from that, Tom, so just coming to you, and quite often, I've heard a lot of companies say, oh, you know, we want to go and set up in the US and we're just going to get a Delaware company, right? And I often wonder, what's behind that? What does that really mean? What is a Delaware company? Is that the right way to do it? Because quite often in the UK, companies can go on to Companies House, register a company, and no one really knows what they've registered until 12 months later. There's a tax issue that comes up and they think, well, okay, what did we do? And similarly to other countries, when companies are being established, I don't think companies really, or people really think about the future or have a vision in sight as to what they're planning and what their goals look like. So if you could please enlighten us a little bit more about choice of state, Delaware versus something else, what does it mean, so that our audience can understand that a little bit better?
Sure, I'll try. First of all, I echo all of the comments that have been made by Teresa. She's really on the ball, and she's providing great advice. To me, the issue of setting up a U.S. company boils down to the famous C word, commitment. Are you committed to doing business in the United States? Or do you want to put your feet in the water? And we all know when you put your feet in the water, it's going to be cold. So ultimately, from my experience, it's go big or stay home with the U.S. It's not a question of let's see what happens. We have a budget of 200,000 quid that we have allocated to the U.S. and we'll spend that money, and then we'll see how far we get, and then we'll take some perspective and decide how we go forward. Hey, save your money. That's not the way to do business in the United States. You got to do business in the United States to win, to have a long-term vision of having boots on the ground, whether they be UK people, other foreigners, or Americans. Somehow you got to have that. Try to minimize the number of states where you have employees, just because of what Teresa was saying, is that you got employees scattered all over the United States. Well, you got tax issues scattered all over the United States. So Delaware, we set up 50, 60, 70 companies every year. 95% of them are set up in one state. And there are a handful of really good reasons to consider Delaware. Oh, but I've heard Wyoming has great secrecy laws, and Nevada and Florida and Texas also have the tax-free, blah, 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 blah. Well, yeah, but you got to be careful with those states. Delaware is very consistent when it comes to the fact that, and I'm not going to talk tax here, but there are tax advantages of setting up in Delaware, but that's not my bag. And for me, if you have set up a Delaware company, the number one reason for me to set up a Delaware company is credibility. You know, you tell people I've set up a company in Wyoming, and they'll go, wahoo, yee-hoo, yippee, let's punch them doggies. They're going to wonder, why would you set up a company in Wyoming? Americans are not really up to speed on the advantages, so-called, of, you know, saving $100 a year and this ultimate secrecy, so to speak. I don't know whether it applies or not, of Wyoming. So, you know, but we do know about Delaware. And if you tell somebody we've got a Delaware company, boom, they move on to the next issue. They have this story in the back of their mind that you've been well advised. So for me, that's reason number one. A second, very closely related reason to set up a Delaware company is that it's in your interests that one state's laws apply to all of your business relationships in the United States. Asma, you've already exposed, and Teresa underscored it, that there are 50 states, and each state has their own laws. Sometimes there are laws that you can't get out of, even if you apply Delaware or some other state's laws. But normally, if you call in your sales terms, in your warranties, in your contracts that Delaware law applies, courts will generally apply Delaware law. And why is Delaware law interesting? Well, any self-respecting business lawyer in the United States is going to know the laws of two states, the state that they're working in, and you guessed it, Delaware. And so if you want to try to impose one state's laws across the board in the United States, it would make a lot of sense to set up a Delaware company, because most companies are prepared to accept Delaware as the law governing the terms of the relationship. So there are two reasons. They're not the two reasons that most people bring up. You know, the tax advantage, it's simple to administer companies. There's a lot of predictability to the outcome of disputes in Delaware because there's so many companies that have been set up. And those are totally relevant, very relevant. There are even more reasons. But to me, credibility and this issue of having one state's laws govern your relationships in the United States. And by the way, I'm real strong on setting up U.S. companies at an early stage of your business activities in the United States. Americans want to do business with American companies, just like Brits want to do business with British companies. There's nothing strange about that. We want to pay American companies for their products and services. It shows your commitment to doing business in the United States, even if it's long before you have employees in the United States. Just the mere fact of you selling through a U.S. company is going to make a lot of difference to your long-term success.
So that's really interesting because I don't think many companies understand that. And I think everyone sees America as just one big, one big country as any other place. And no one really realizes these sort of, factors that they have to take into account in terms of legislation, I guess, and the tax side. So I think people really need to be cautious about that. And I would really highlight that if you are planning on entering that market, to seek advice early, because these are the types of things you've got to know in advance. Otherwise, you can get into all kinds of problems. And I guess just thinking it through in my head then, Teresa, I'm coming back to you, the reason, because obviously this discussion still flows. So if a company has established a structure, they've set it up, and you've given some guidance around that, what about things about, I mean, in the UK, directors are not personally liable for anything. In the US, is there personal liability? Do people have to think about their personal assets? I mean, what are the considerations for that?
Yeah, so I don't want to step on the legal side because I'm not an attorney, but the tax and the thank you, Tom. The tax and the tax is so closely tied to the legal. But from my perspective as a tax advisor, if you set up a structure like a C Corp or LLC, foreign owners and investors should be protected both from tax and legal issues, because if you utilize that U.S. structure properly, there's and what I think beyond that, talking about protection of the owners and the investors' personal assets is really what is their involvement with the U.S. operation and from where. So if they are involved in management, but from abroad, they don't step into the U.S., they don't have a visa. Like I said, that protection from that U.S. entity, there should be no carryover to them of personal, tax issues or legal issues. If they're in the U.S., whether they have a working visa or not, they can have U.S. tax consequences. And those have to be managed appropriately. And I think what's important here is, if you have a working visa and you're on U.S. payroll, obviously, as an expat, you're going to expect to pay tax. But we have worked with numerous companies who have people from the parent company coming here without a visa for a short term. they stay longer or they're doing certain types of activities, that you do have to monitor that they don't step into U.S. tax consequences even without a working visa. And so that's really important to know because that's very common. And I think one last thing that is a little bit more unique, but it's not uncommon, is when you have a U.S. subsidiary and a foreign parent company, key employees in the U.S. often are promised equity in the future, especially with a tech or a startup company, or there's stock options that are put in place for the key employees in the U.S. for the parent company. And these things can be very, very tricky and have unintended consequences. Tax especially, because stock options and stock incentives in the U.S. have very particular rules and can have some very unfortunate tax consequences. So I've seen these things be executed by the advisors at the parent company from that country and have very unintended consequences for the U.S. So that kind of, it's along the lines of what you're saying, protecting the personal assets, but it's also thinking about that tax impact to your expats or your U.S. employees even. Really thinking through, not just at the company level, getting them over there operationally, but, you know, what are the rules that have to be looked at? What agreements, employment agreements have to be in place, or intercompany agreements regarding those people in place to really protect both the individuals as well as the company.
Great. Fantastic advice and very, very helpful. So now I'm going to go on to Eric. So Eric, I mean, over the last 5 years, well, probably less than 5 years, I think the US has probably undergone some major tax and financial changes. There have been considerable tax cuts in 2018, I believe there were tax reforms. The coronavirus, obviously, aid relief was over $2.2 trillion. And then again, this year, we saw a $1.9 stimulus package. Is there likely to be an impact on major federal tax bills and increase the state tax rates this year, Eric? So just to kind of talk us through, what do you see, you know, coming in the future as a result of some of these changes?
Yeah, but before I get to that, if you don't mind, I would like to just add a few comments on coming to America, excuse me, to do business. First of all, people must keep in mind this is a huge country, and it matters ultimately where you're going to set up your business. And a lot of that depends on what kind of business you have. And one of the most important things is setting up where workers are likely to be available that have the skills that you need. And, you know, there's been a lot in the paper recently about Americans who don't want to work anymore. They got used to being home in COVID, and they seem to like that.
So do the Europeans and the UK nationals. So I think it's the same across the world.
So you need to make certain that there are workers available. It's also, depending on your business, many states, that's one of the things about this country that is really just different than almost any other country in the world, is the fact that we have 50 states which are each quite independent of one another. They compete with one another. And some states offer incentives to do business in the state. And that's something that you need to look into. I mean, I have clients in the automobile business that have been given millions of dollars to put up factories in a particular state. Now, most people are not starting up an automobile business, but there are other incentives that are frequently available. There's also, if you're in the business of shipping goods, you better make sure that you set up your business near a major airport. And that's another factor to take into consideration. So those are really independent of, you know, where you, and one thing about in the US, as Tom pointed out, where you incorporate is not dependent on where you set up your business. In this country, you can incorporate in any state you choose. Tom likes Delaware, and I would say most people feel the same way. Sometimes, however, if you're in a particular area or a country, and they get very, I can't think of another word, but nationalistic. And they like to deal with a corporation. If you're in California, they just like to deal with a California corporation. One thing you can also think about is if you set up in any state, it's very easy under our tax laws to switch your state of incorporation without incurring any serious tax problems. So you can always do that if you find that there's a reason why maybe you're not where the people you're dealing with would like.
Eric, so I just want to follow on from what you've just said. So you say there are different tax incentives in different states. How can people find out about those incentives?
Well, that's a good question. And unfortunately, you have to just do some digging. I imagine there are experts, who, I find that almost any question like that, I go to Google.
But that's what you're here for today, right?
Name a company that can help me decide where the best incentives are. But the thing to know is that every state has an economic development, whatever they want to call it, office. Some of them are very large. And if you ever watch television, New York has been advertising, come to New York, it's the greatest place in the world. And I mean, typically, no business coming here is going to say, well, I don't know where I want to be. I better investigate all 50 states. That doesn't happen. When you're setting up, you probably had some advice. You say, okay, I mean, also, maybe you're coming from Norway and you say, okay, I think I should be in Minnesota because it's nice and cold. But other people might like to be in the South where it's a little warmer. At least, but typically, business people would have some idea in advance, maybe pick 3 or 4 states they might consider. And then you go to that state's incentive office and tell them, look, we're thinking of setting up in your state. Is there anything you can do to help us? And you can find that out without too much trouble, because the states are very eager to have you. Some of them have more unemployment than others, and they're always looking to put those workers to business to keep them calm. So
that's really helpful, Eric. So Teresa, I think you put your hand up there, like the incentives. So please, if you wanted to share some, enlighten us with some of your experience on this.
Yeah, I just wanted to mention that at the federal level, there's an organization called Select USA. They just had a week or 2 ago an annual summit. Unfortunately, this year it was virtual, but it's usually in person in Washington, D.C. And at a federal level, it really has about 3,000 to 4,000 people in the past come to Washington, and all of the states are there. All those economic development entities at the state level and the regional levels that Eric mentioned are there. So a lot of foreign companies come in their planning stage, or even companies that are already here to plan their next investment in the U.S., and they can meet with all of the different states kind of within one setting. They also have like road shows to different areas. And then also, as Eric mentioned, I'm located in Michigan. We do have clients throughout the U.S., but we have a lot of clients in Michigan because of the automotive and tech industry here. But in Michigan, you won't find this in every state, but in Michigan at the state level, the Michigan Economic Development Corporation, MEDC, the Detroit Regional Partnership, all of the county economic developers, they work very closely as a team for both domestic and international attraction, business attraction. And but the incentives are given at the state level. It's usually tied to job creation, or if you have more of a high-tech business or are involved in some of the more emerging industries, there's incentives there, even if the job numbers are low. But all of the supporting regional and local economic developers support that whole process. So in Michigan, I can speak for, they work very well together as a team, not only the economic developers, but also with the advisors like myself and the attorneys, the bankers. It's really a great process, and I know other states have that as well. But as Eric mentioned, picking that handful of states where you know you might have a cluster of customers or an employment base, you start there and talk to those the people at the state level to find out. And it's important to do that first before you set up an entity, before you make that move into that market, because if you're already there, they're not as likely to really work with you to give you incentives. So you want to have that kind of as a first step in talking about what might be available. The other caution I would say, and I've heard this from many companies, it's great to have incentives, but you can't base your whole expansion plan and funding on the incentives. It's a bonus, and it's great whatever you can get, but you have to make sure you've got the right planning and funding in place to be successful.
Great. We've had some really good guidance so far, and time's flying with me. So I'm going to push on to a few more questions, because I think, yeah.
I'm sorry. I guess I went off on a tangent there for a moment and didn't really respond to your question about prospective tax changes in the United States. The current corporate tax rate in the United States is 21%. It had been 35%, and it was, strangely enough, the United States, which wanted to attract business, had the highest corporate tax rate in the world a few years back. And so they reduced it to 21, and many people, particularly left-wing Democrats, if you will, think they went a lot too far and want to raise it. And the Biden administration has proposed generally raising the tax to 28%. That has met with a lot of resistance from the Republicans, probably because they didn't think of it, and they like to keep the tax rates low. And it's not clear where that's going. It's one of many areas that taxation is fraught with battle between the Republicans and the Democrats. And the Biden administration wants to increase tax rates on the highest income earners, and that's not clear where that's going. But there is a lot of pressure, and my guess is you're going to ultimately see the corporate tax rate get raised. Maybe they'll compromise around 25%, something like that. So it probably won't be as low unless the Republicans are going to Republicans filibuster. For those maybe of you who aren't familiar with the term filibuster, that's where one party in the Senate sort of takes over, and even though they only have 50 or even 52% of control, they just keep talking, and then they prevent anything from getting done. So that's always a possibility. But
that's great. I think, yeah, I mean, that's really helpful advice. I think it's good for people to know upcoming changes as well, so that they can actually keep that in mind. But again, just quickly going on, and my train of thought in terms of where we're going, and I'm just following it through. So a company may have decided, yes, this is the type of company I want to set up. They've looked at a state. I guess the next natural question that comes, they've looked at all the tax liabilities and so forth. The natural question comes up is immigration, right? So how do I set up, or how do I send my first person there? What are there are investment opportunities, or I could set up an entity, and what are the issues around that? So Tom, if I may come to you, I mean, there are so many different categories. I saw the other day there was something new that's been introduced, and I forget the details of it right now, but American companies can employ foreign people of tech companies, I think, without having to go through the red tape of specialized visas under the L1 program. So I'm not going to go into the technicalities, but generally speaking, what are the immigration implications for businesses when they are setting up in the US?
Well, just to finish up the incentives issue, don't count on incentives. Set up your company in Delaware or wherever you want, and then find where are your customers. That's really the place probably that you want to set up your business. Employment is, of course, key, but if you're not employing at bare minimum 3 people right off the bat, state governments aren't going to pay much attention to you unless you're buying a piece of real estate, et cetera, a building, et cetera, so that there's a lot of money injected into the local economy. When it comes to, so really I'm echoing the statements of Teresa and Eric on that, but just wanted to underscore that point. When it comes to immigration, as everyone knows right now, it's extremely difficult to get into the United States. The rules are changing slowly. The national interest exception requirements remain high, and they seem to be getting higher and higher. We're so far so good. We've been successful in securing the national interest exception so that clients can get into the United States. Indeed, I have meetings with 2 separate clients that landed yesterday, but until such time as they confirmed they had arrived, we weren't sure whether they were going to be able to get in. But let's presume that COVID calms down, which I guess is a pretty big presumption at this stage of the game, and we get back to some type of normality. The key thing to understand is that if you want to send people to live and work in the United States, the U.S. company that you may not have yet organized in the U.S. is the key sponsor. I'm cutting through a lot of chase here, but the fact of the matter is it's not the individual employee that seeks the visa to live and work in the United States, and it's really not your UK or foreign employer that is the key sponsor. The Immigration Service wants to see that there's something in the United States and something that's functioning. So you can't just set up an American company and say, okay, here I am, I'm coming to manage my American company. If it were that easy, we wouldn't have any immigration laws. People would just set up companies and say, here I am, I'm coming to manage my company. Well, up until about 20 years ago, that worked, actually. I've been doing immigration work for close to 40 years, and the enforcement of the immigration laws has changed dramatically under those 40 years. And why? Well, because of fraud. Because people would set up companies and then seek L1 visas to be transferred to the American company, and then they'd disappear into the woodwork because they didn't do what they said they were going to do. So now the immigration authorities, both the consulates abroad and the U.S. Immigration Service, don't buy brand new companies, even though there is a visa category called the L1 new office visa. But that is now selectively enforced. Namely, you've got to set up your U.S. business. You've got to open up a bank account, fund the bank account, I'd say with at least $50,000, and then ideally hire someone. Well, but the person we're sending over is supposed to recruit. I understand that. And guess what? Get an office. Yeah, but we work remotely. What's the matter? We've been working remotely for 18 months and and we're a software company and everything is done remotely. That's fine. The Immigration Service really doesn't care. They want to see that there's an office, and they can demand photos of the office, showing the equipment, the computers, the desk, et cetera, that is there. They don't always ask for it, and we generally don't submit that with visa petitions, but they have a right to ask for it. But let me put it to you this way. Having an American employee on staff at the time a visa application is filed usually spells the difference in about 10 to 20 in the likelihood of a successful visa application. And as a result, we push our clients to set up the company, have a bank account. Any and all money you spend on your U.S. adventure should be spent by the U.S. company, even though it's the same money, whether it's spent by your foreign company or by the U.S. company. Send it to the American company and let the American company spend it, because that will show your commitment to doing business in the United States, and it will help you achieve these sort of thresholds of around $100,000 of investment and spent money on the U.S. investment that is generally required in order to get the E2 treaty investor visa. I don't think we have time today, Asma, to go through each of the various visa categories, but that's for someone to come and live and work in the United States.
Yeah, I mean, there are so many different categories to this, Tom, that, you know, when I sometimes look at the specialized, the L1A particularly, even with companies that are established and the complexities and the challenges they have to go through that. So I think we could probably dedicate an entire session just to that subject, and we probably will do in the future. So I'm just, again, just from what you've said, Tom, the clients that you're getting, they're talking about working remotely in different locations, trying to get advice. And I guess I'd like to come to Teresa then. So post-pandemic, when people are asking these new questions that they are setting up in regions, but they actually don't want to physically be there, they don't want an office, or they want to hire remote workers, how is that going to impact people?
Well, it's interesting because there's a lot of, this isn't new for the pandemic, the question of, do I really need to have a U.S. entity, or can I just operate in the U.S. from the foreign company? Obviously, that question, the circumstances have changed around that question, but it's not a new question. And if you have customers in the U.S. that you are direct shipping product or providing services to from your home country, generally, you know, the issue of, are you creating a taxable presence in the U.S.? You're pretty safe, especially if you're in a country that has a U.S. Income tax treaty with the U.S. And so really, this is about taxable presence and U.S. employment requirements that the foreign company should want to stay away from. So if you are hiring remote workers in the U.S. as a foreign company, the problem with not setting up a U.S. sub and hiring them through the U.S. sub is that now, as a foreign company, you have a taxable presence in the U.S. You're going to have to file tax returns, but you also have to meet all of the U.S. employer requirements, which means you need an EIN, a U.S. bank account, you know, all of these things. You're basically right there with the same requirements as a U.S. subsidiary, but you have the complication of now you've got this U.S. tax return where you've got to file. So that's one of the things that I see. It's that question of, can I just operate as a branch? Isn't it easier? Isn't it cheaper? And the answer generally is no, unless you have a very basic business model that you're just shipping in or just dealing with customers from abroad. The other thing with that is, even in that scenario, you may not have a taxable presence at the U.S. level, at the federal level, but if you're shipping product, if you're an e-commerce business, if your e-commerce business has exploded during the pandemic, you have to be careful of sales tax rules at a state level, even as a foreign company. So that's a complication. And then, like I said, if you're a foreign company and you want to hire someone in the U.S., then you need to have that U.S. sub set up to just. You may feel like it may cost more, be more complicated, but in the long run, it isn't. Looks like Tom has something to say.
Yeah, Tom, please go ahead.
Boy, do I ever. Do not hire any employees in the United States as a foreign company, period. Why? Liability. Why in the world would you want to tax and all that, what Teresa said, absolutely. But from a legal standpoint, you don't want to expose your foreign company to liability, not only with the U.S. employee. You want to limit their rights if they have claims against the company to your American subsidiary and not your parent company overseas. But what happens if they have a car accident? What happens if they slap somebody in the face and there's a lawsuit for that, or whatever it is that they might do in the U.S.? All of a sudden, your foreign company is exposed to liability claims in the United States, which makes absolutely no sense. For example, we charge around $2,000 to set up the company, get the tax identification number, prepare the bylaws, the minutes, all that stuff, have the company ready to do business in the U.S. And if that kind of money is something that, oh my goodness, we don't have that kind of money, then my advice is better stay out of the U.S. until you have those kind of funds.
Okay, right.
I have one more comment on that, Asma. What I've seen too with tech companies, and especially with the increase in e-commerce and the increase in tech companies, is a lot of times you'll have a company that has developed an app or is selling a product via e-commerce, and they don't feel they need to be in the U.S. And a lot of times we see these companies more and more having U.S. investors, but the development or the operations are overseas. You have to think about your growth plans, because if the U.S. is a target market for you, there's going to be a point where you need to be on the ground and have employees and have customer support and things like that that are going to create a taxable presence. And from the beginning, if you have 10% or more U.S. investment in your foreign company and you plan to be in the U.S. market eventually, that is now a complex tax situation. And the operating foreign company can no longer just set up an entity without knowing that complex structure with the investor, the tax structure. So I just want to mention that because we see a lot more of that happening with tech companies, and there's a lot of surprises. And these are surprises for companies that may not be that big yet, but the cost of the tax compliance and advice for that is just out of proportion to what they're expecting. So I just wanted to mention that.
That's very, very helpful, Teresa. So I'm glad you did. So I'm just going to move on to Eric, because again, while we're on this subject of post-pandemic world and digitization and so forth. And so Eric, in terms of tax compliance and maintaining records, we all know tax is a big headache from personal self as well as from business tax, and maintaining records and having records available to the authorities has always been traditionally a big thing. Now that we enter a digitized world and a world where everything seems to be online, how is that going to impact maintaining records and being compliant?
In one sense, it doesn't impact it at all, because before the world was digital, you were required to keep paper records of for every transaction that had any effect on your taxable income. And you were, in this country, the statute of limitations for tax adjustments is basically 3 years, unless they think you've omitted a lot of income or committed fraud. But it's probably wise to hang on to your tax returns for, say, 6 years at least. Now, digitally, it's exactly the same. Whatever records you had to maintain on paper, you have to now maintain them on the computer. And in fact, when the Internal Revenue Service starts auditing you, the last thing they want is a lot of paper. And so frequently what happens is you download, or however you handle it, but you email your records to the Internal Revenue Service agent who's conducting an audit. But you still have the exact same obligations, and you better make sure that, I mean, the one difference at least is your paper records, you kept in a drawer and they were pretty safe. Today, with hackers and the like, somebody could get into your tax records possibly. So that is one difference. But there's really no difference in what is required. And that is, you have to maintain records that will allow the Internal Revenue Service to check the taxable income you've reported to see if it can be justified on the basis of the records you have.
That's a great answer. Thank you. We are pretty much running out of time. I've got 10 minutes to go, and I've got questions in the panel as well. So there are some questions that I'd like
Asma, the one thing I just would point out that we've never mentioned, we kind of assumed, people who set up an entity here. And I think that's true. And you have to keep in mind, as Teresa said before, you want to make sure you have limited liability. And the two kinds of entities that'll give you that are an LLC, a limited liability company, and a corporation. And the LLC is a corporation. People frequently think they call it a partnership. And the reason they do that is that under the Internal Revenue Service rules, an LLC, subject to some minor exceptions, is automatically treated by the Internal Revenue Service as a partnership for tax purposes. That does not make it a partnership for state law when it comes to lawsuits and the like. It's still a corporation. But but the LLC is just a simpler kind of entity. One thing that you do not want is, to set up a partnership, because it's more complicated. You need a general partner, a limited partner, and the general partner never has limited liability. There are ways to try to get around that, but you really tend to be exposing yourself. And the LLC is simpler to use. You don't need a board of directors. You don't need officers. You can just have a manager. And so it makes sense particularly for smaller businesses. And more and more people are getting quite used to dealing with LLCs. So to keep that in mind.
Well, that's great advice, Eric. Thank you so much for that. So I'm just going to do a few questions in the audience. So someone has asked, to what extent will my business need to adapt to American culture? So we didn't really talk about culture. And I guess people don't realize that there is a big difference in the US culture to some other countries, even the UK. And I've personally seen that some ways of doing business are very, very different. So would that be resolved by hiring someone locally? I mean, what advice would the panel give? Anyone? I'll come to Teresa. Maybe Teresa, would you like to comment on that?
I think, Tom, were you going to say something?
Sure, and very briefly, yes, it would make normally a big difference if you have Americans selling to Americans. It's like Brits selling to Brits. They understand the culture better. There's a feeling of comfort as a potential customer. There's also the nearness that also provides a feeling of safety for American consumers. So, normally what clients have done over the years is to hire American sales and marketing personnel. And if they're going to send people from overseas, they send technical people or management people that'll maintain the link between the parent company and the US.
I mean, maybe there's no right or wrong answer to this, but if you look at it, like I said at the beginning, we're talking about English nations, right? English-speaking countries. We're talking about the West, very advanced, very similar ways that we work, very similar ways and beliefs that we have. Why is there such a big difference, right? Because there really is a big difference in the way you conduct business in the States compared to Europe. I mean, can you give us some anecdote or anything? I mean, which is probably not so technical, but just some insights into why there is such a difference.
I'll give a quick one before I hand it over to my colleagues, and that is American enthusiasm. We're all enthusiastic in the United States. We're positive, we're optimistic. That's how we're trained to be, and we're raised to be. In some countries in Europe, if you're a little child and you fail at something, you're punished for failing. In the US, generally not. You're encouraged. You didn't do it this time, Susie, but hey, we're here to support you. You'll do it next time. And so we've grown up in this culture of enthusiasm and positivity and optimism. But foreigners frequently mistake that for genuine interest and commitment. And it's not at all that. It's not at all. And you've got to really understand it. I mean, really understand it. Because otherwise it's easy to get wrapped up in American enthusiasm and think, wow, this person's the perfect partner for us or the perfect employee. Not at all. We know how to sell ourselves. We really know how to sell ourselves extremely well. So the way to solve that is to be demanding. So
Tom, are you saying that hiring American salespeople is a reason for success of your business? Is that a good conclusion?
It certainly can be. It certainly can be. It depends on how complicated your technology, your products are. I mean, if they're extremely complicated, well, and you've got very sophisticated customers, you may need to send some people from the UK to the US.
Mm-hmm. Okay, great. Yeah.
I see something.
I would add this. I think the most important thing is you can hire or bring into the country the locals from abroad. But what is, to me, key is that you do your best to find people who are fluent in English. Because if you get somebody who may be as charming as can be, but is hard to understand, then you have a real problem. It's
okay, great. And Teresa, you want to say something?
Yeah, I was going to say real briefly from another perspective, business culture from an operational side. There's specific differences about benefit packages and employment agreements and just different things different ways of doing business based on the different rules. Like payroll is always going to be different than your home country, whatever your home country is, and the benefit packages and hiring and even the employment, like at will or like the less permanent, less loyal employee relationships that you see in other countries. Those are all just differences that continue, not just like once you hire that U.S. salesman or U.S. president or however you set up your business, but understanding those and working with your advisors to to kind of know those differences from the beginning and have those things in place, so they're not surprises. You want your business plan to reflect those costs of doing businesses that are going to be different, and so it's cultural, but it's also like operational, and it's also the requirements, and it's kind of all wrapped together. But I think one of the most important things I heard is English is important. Having English speaking people coming from the parent company where the expertise might be needed to bring here. It's really important, and we see that based on different countries that is, more or less prevalent, and sometimes that is an indication of how long it will take to be successful or whether you'll be successful.
I mean, this subject is such a vast subject. I mean, we haven't even got through half of the questions that I had planned for you all, and we've got 5 minutes left. So I think what I'll do is, I mean, all the questions that we've been asked so far by the audience, I think we can probably take their details and share them out and get those answered separately. But in the meantime, I think just to sum things up, can I possibly ask each of you just to give me in a sentence or two, really your kind of final words on expanding or international expansion into America? So Eric, I'm going to start with you.
Did you say me?
Yes, I did.
Oh, I'm sorry. Oh, okay. Right. Well, I think the United States is a great place to do business, and but you have to comply with the rules. And one thing that sometimes people don't understand, coming from some foreign countries, is that, believe it or not, bribery is not a way of life in this country. There are many. I was involved in a criminal tax investigation a few years ago where I learned that in Italy, you couldn't do business without handing out Rolex watches. That doesn't go over here, and particularly in the government. People sometimes, if they're being audited by the IRS, maybe they'll drop the watch on the table. That's a very bad idea. The IRS people I met every one of them is honest and hardworking, and they don't go for that. So you have to abide by the laws and do the proper thing to succeed in the long run. Great.
And Tom, words of wisdom?
Be committed. As I mentioned earlier, it ain't going to happen by itself. Trying to do business via the web, sure, it's a lot more possible today than it used to be before, but you've got to have a long-term plan to be successful long-term in the United States. All your competitors are here. They're going to be here. They're successful doing business here, most of them. It's up to you to prioritize the U.S. market and make sure that you have the time as well as the money, but especially the time to commit to making it work and adapting all of your materials to the U.S. Don't try to use COLOUR in the U.S. People will see that it's a foreign company doing business in the U.S. Spend the time, spend the money, adapt to doing business in the U.S. and make a commitment.
Great advice. Teresa?
I would say don't rush and don't take shortcuts in your planning process. It doesn't mean you can't move quickly, but you have to have the right information. You have to have the right support, and you have to have the right amount of financing to see it through past that startup phase. And if you think about that, you need the right advisors to give you support. You have to have the right advisors that working as a team, because tax, legal, all of that is so interrelated, and that flows over to the operations of payroll and insurance. And you just need to have a team supporting you so you can focus on growing your operations and not have to worry about the multi-state rules. Your advisor should be should be managing that for you.
Great, fantastic. I've actually really thoroughly enjoyed today's session, more than I thought I would, because tax was such a complex area. But actually, I've learned so much, and I think it's been brilliant. And it just makes me think we need to do another one now. We won't before we've even finished this one. But we've had great feedback from the audience, and everyone has thoroughly enjoyed it. I think you've given absolutely fantastic, valuable advice that people will take away. And I'm sure that if they've got questions, they will ask us, and we will share that with you afterwards. But it's been an absolute pleasure to have you all. I mean, just such amazing speakers from such brilliant firms. And I am very grateful. And I know you can't see an audience and we're online, but I'm going to clap and I'm going to say thank you. So thank you, everyone. And thank you for the audience for joining. And I hope you can join us again sometime. But I hope you've learned a lot today. So take care. Thank you. Bye-bye.
Thanks very much.
Thank you. Bye-bye.